It's now time for the Trader's Edge. Now, Steve Rhodes.
Good Wednesday morning to you, all you wonderful money masters and treasure hunters out there. Thanks so much for joining me. I'm Steve Rhodes, host of the Trader's Edge. And folks, I absolutely love being here with you. I hope that you are off to a great start of your Wednesday. You absolutely should be. And if you are not, folks, let's just simply go ahead and change that. Let's go to my favorite spot, if you will. And what you should always be able to do, folks, is put yourself into a peak state. You know, we're going to my favorite spot. This is Lanai, Hawaii. And, folks, it's always important. You know, life, folks, it's all about, our goal is not to ignore the problems in life. Yeah, we'd love to be able to ignore them, but it's not really to ignore the problems of life. It's really all about being able to put yourself into a peak mental state so that not only can you handle it, but you can come up with the solutions. And, folks, I do want to make sure that I pass along to you when you are, you think about it like this. Take a look at, maybe you know folks like this in your life, and they'll spend 95% of their time on the problem versus 95% of their time on the solution. And that's really what it's all about, folks, is put yourself into a peak physical state. Now, make sure when you're coming up with solutions to any problems that you make sure that you come up with at least 3 different solutions. Why, folks? Because when you only come up with one solution to any problem, you know what they call that, right? They call that an absolute dilemma. No, they call that an ultimatum. I apologize. I've only been up since 3:30 this morning. They call that an ultimatum. It's when you come up with 2 choices, right? When you come up with 2 options, if you will, that's when you've got a dilemma. Because it's either A or B. What you always want to do when you are solving problems, and you want to spend 95% of your time on the solution, not on the problem, folks, you want to come up with 3 items. Because when you come up with 3 items, folks, 3 possibilities, what you have are options. And it's really all about options. You want to make sure you put yourself into a peak mental state. Make sure that you take your place to the best possible spot that you can, a place of strength, folks. And then you'll be able to meet the challenges so that you can take action. What kind of action? That's right, massive action. Let's go take a look at the massive action in the markets. They have been, as Tom says, I like to borrow things every now and then, up, down, and all around. Right now you've got the Dow futures. Looks like they're up maybe about 8. ES Mini up a point. You've got the NASDAQ futures down almost 2. Russell 2000 futures up, looks like about 2. King Dollar, came back from vacation. King Dollar's back in the building, only up 2.5 ticks right now. You've got gold trading out at $16.52. That's up $5.40. Silver up 15 pennies, trading out at $31.98. You've got light sweet crude. We're paying a bunch at the pumps, folks, up 40 cents, trading out at 106.47. Our call number is 877-927-6648. Let's start off by just taking a look around the world. Let's take a look at what is going on over in Europe and Asia. Right now you've got the DAX trading down 7 points. Let's take a look at the DAX here. The DAX had traded up earlier this morning. It was trading, it got up to 71.14. You're trading out at 7,047. Clearly the DAX broke this nice, really momentum, if you will, coming off of the low from March the 7th, and it broke that trend line, and that's a good thing because you wanted to break those trend lines. When you have that type of propulsion, if you will, when you have that kind of propulsion, what's going to happen, it can't sustain itself with that type of an angle. And what you do want to see, just as the DAX is doing here right now, it's just simply trading sideways. Now, what you'd like to see is just a normal pullback. In the case of the DAX, that would get you into the 68.34-ish range. Certainly 68.72 should be its next stop. Again, trading out at 7,047, got down to a low today of 7,031. You do have the FTSE trading up 4 points. Let's go take a look at the FTSE, see what it is doing. And the FTSE also having broken that little up thrust going back to March the 7th. Now just continuing to meander itself sideways just really a sideways move. Nothing there. Where is going to be the area where we'd like to see this pull back to? Well, ideally, you'd like to see something like this pull back into the breakout area. Now, it's trading right now inside that February 3rd swing point. The high there on the FTSE is 59.0107. And what you'd like to see it do is come down and test that breakout area. Now, the breakout area was where March 6th went down to when the markets moved down. In this case here in the FTSE that we're looking at, closed just a little bit below that. So from a bullish standpoint, what you'd like to see it move all the way down there, back to that breakout, test that volume, because there was volume on March the 6th, be able to test that on lighter volume, reject that. Then you will have moved sideways. You will have had this little sideways consolidation pattern. It will have cleared up any overbought situations out there, and then the market could move north. If we go take a look at the Nikkei closing down 55 points last night. Let's see here. Where is the Nikkei? Nikkei closing out at 10,086.49, and that has been on a tear. The Nikkei making a 100% move, getting all the way back into the set of swing points. Let's go ahead and remove this so we can take a look at this. Get all the way back into the set of swing points, which we're going to July the 8th. The high swing point out there was 10,207. I don't believe it got all the way up there. It got up to 10,172. The Nikkei on a tear. Why? Because of the Japanese yen. And we'll take a look at the yen in a moment. Let's go take a look at the Hang Seng. The Hang Seng off 31 points last night, and see what the Hang Seng was doing out there. Hang Seng making a 0.786 retracement off of that March low that was put in on March the 6th. In the case of the Hang Seng, it was put on March the 7th. So the Hang Seng showing some weakness, because as we took a look at the other world indexes out there, they are not into the area of March the 7th. Let's see if it got down there. The high on March the 7th inside the Hang Seng is 20,732. It actually this morning got down to 20,756. So it didn't get all the way down there, but as you can see, it did a 0.786 retracement. Probably, with the what it would look like to me, because these markets here, they move, it's a one world market. So when you have the Hang Seng being the weak link in this chain here. Now, we didn't go take a look at the Shanghai, so we'll go do that as well. But it looks like the Hang Seng being the weak link here, you would expect the Hang Seng to actually do an expansion as the others are coming right back into their breakout area, or at least making a 0.618 retracement. Well, where would that actually put the Hang Seng? If, in fact, that happens, that would take it down into the 20,200 range. That would be the 1.272 expansion off of this swing point. Could also get down to 19,830, right in that range. Now let's go see if in fact it is the Hang Seng. That is the weak link out there, or is it the Shanghai? Shanghai finishing up 2 points last night. And let's see what the Shanghai was doing here. Shanghai, let's see here. Where is March the 6th? So, okay, no, this is the weak link here, because it is trading underneath March the 7th. The low on the Shanghai was 2501.98. You closed at 2491.67. Looks to me like it's completing an A to B equals CD pattern. Maybe it's going to complete a couple of them. You've got one right here going out back to February 27th when the Shanghai made its high. How about that? The Shanghai making a high. Made its high at 2596.15. The low that it put in was down on March 7th. And it goes ahead and it bounces all the way back up on March 14th. And what it's done so far is made a 1 to 1.272. Now, I'm just going to show this because I do it all the time, and I do want you to learn something here. When you take a look at this C to D leg, take a look at the downdraft that you had there. You can see clearly trading on the left side in this ABC down. That tells you it wants to do more than a 1 to 1 A to B equals C to D. What's it do and complete this morning? It completes a 1 to 1.272. That low, 1 to 1.272, would have been 24.73. What did it get down to? 24.73. We're going to round. We're going to just leave off the pennies. Actually got down to 24.73.15, and 24.73.55 would have been the exact nut. You got to love that. Now, what that tells me is that the Shanghai wants to actually complete a 1 to 1.618 on the way down. That's next move is going to be 24.40. 877-927-6648. Let's go take a quick peek at King Dollar, see what King Dollar is doing out there. Let's remove this from the system here, and what we're going to take a look at is, let's go take a look at the retracement that it's trying to do, coming back to the lows off of February 29th all the way up to the highs that it put in on March the 15th. Still below the 0.382 area. So what is game here? What is game is 79.28. Right now, just really, did it reject? it's trading in when you take a look at King Dollar, March 9th was a relatively big day out there. You're trading inside that swing point. So right now, nothing more than just simply sideways, that being up just a penny from the close yesterday. Yesterday was certainly a wild day. No reason that today won't be a wild day as well. And it's all caused by the party that the Queen seems to be throwing. That is the euro. Euro trading out at 1.32303. And right now, that is in nothing more than a consolidation range. It still has an AB equals CD pattern that would take it down into the 129, possibly 127 area. 877-927-6648. Got the Dow futures up maybe about 8. Looks like we're going to have a relatively flat open here. Give me a call, folks. Would love to hear from you. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. You've got pretty relatively, let's go water skiing. I hope it's like this on the Gulf. You know, it's nothing like being on a big body of water and having it be in smooth as silk. Of course, if you're sailing, you're not looking for that. But you got the markets are relatively flat out here. Had a request to go take a look at CSX for a subscriber here. And CSX, folks, that is the train company, if you will. And look at the volume that had on March the 15th. That had a nice breakout. Went from a low of 2022 up to 2196. Did it on 32 million shares. Let's go see what CSX has been doing, which it has been in a sideways trading range. It's been trading in that sideways trading range for the most part, the better part of going all the way back to August of 2011. Now, it did break through that area as the market was making its lows coming into the September 21st area, 22nd area here in CSX. I believe it was August the 9th when we take a look at our indexes when they were putting in their lows, and then you'd have October 4th, November 25th as your dates. Now, what is interesting here when you take a look at CSX, and I think it's so important, folks, to be able to take a look at candle patterns out there, reversal candle patterns. If you take a look at CSX, and let's pull this back here, it gave you several reversal patterns. Just take a look at the importance of being able to utilize candle formations as an advanced indicator as what is to come, because that's really what candle patterns are used for. And so I'm just simply coming back here, and I haven't looked at the CSX chart, and I can't remember how long. But if you go back to the highs that were out there on March the 31st, March 30th, I should say, so the high that was making on March 29th, take a look at the high that was actually put in on March 30th. That is a bearish engulfing candle. And when you see that, folks, if you are in a long position, doesn't mean you have to get out, but you really should take a look at your stops. You should take a look at your money management and understand what time period it is that you are in this trade. And so in this case here, when you see this bear, and not only was this just a bearish engulfing candle, folks, this is one that engulfed 1, 2, 3, 4, 5, 6 trading sessions. So it engulfed everything from March 22nd through March 29th. When you engulf that many trading sessions, it's telling you that there is some power behind the move. Now, here's the beautiful thing. It actually gave you an opportunity to get out for a couple of trading sessions. And it came down with some decent volume, came off the top with 18 million shares after the prior day getting up there with 10, and before that 7, and before that 9. And so you want to be able to use these as leading indicators in order to take a look at the trade that you're in. So that was the first time that it gave a candle formation to give you an idea that you should get out of the trade. It gave you another candle formation, folks, back here on July the 7th. In fact, I'm pretty sure if we go take a look at the SPYs, it's July the 7th, as well as a few others out there. And what this created here was an island reversal candle. And not only did it create an island reversal candle, you've got a doji as well. And that's tough to do. That is actually tough to do. That on July the 7th, it opened at $27. It closed at $27.01. You talk about giving you an absolute, I mean, this is one, I got to write this down, and put in our next book, because this is one that you would identify as textbook, if you will. And sure enough, once it puts in that high, so sending your signal out there, that's where it moved all the way down into the lows from the 22nd. So it gave you several times here signals at the highs. It also gave you a signal at the bottom. That signal at the bottom came in on October the 4th, just as it did in so many indexes or ETFs, as well as stocks that are out there. If you take a look at October 4th, what you will see at the bottom is a bullish engulfing candle. And this bullish engulfing candle here in CSX, what it did was engulf 2 trading sessions going back to the September 30th as well as the October 3rd. And that's what you're looking for. You're looking for some sign of strength before you actually get into the trade here. Now let's go take a look at CSX. And, we were talking about, or I was talking about how this thing has been in a sideways trading range. Just take a look at it. Now, what it is doing, it is in the process of, it's not really in the process. Let's take a look at what it came down and tested the swing point here going back to December the 15th. That swing point had 11 million shares, low of 1987. It got down to a low of 1999 on March the 6th. 13 million shares, that 13 going against 11 million shares. Still had quite a bit of volume down there. Now what you need to see is what is it going to do up at the top here. And the top being the swing point of January 12th. It's got 8.8 million shares. If we take a look at the swing point prior to that, on October 28th, that has 11 million shares. In fact, as it came into 11 million shares 2 trading sessions ago, let's just go see what it was doing that with. It came in with 20 million shares. So CSX to me looks like it wants to go higher. It has pulled back yesterday. I don't know if I can see quickly here. Can I switch over quickly? Let's see if I can find out what CSX is trading at on the tape right now. You got CSX, the bid on it, 21.84, closed out at 21.73. 877-927-6648. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races, although hardly anyone is out of the gate. You got the Dow stumbling out, up 1 point. You got the S&Ps right behind it, up 0.13. Composite up 4 points. Okay, it's out of the gate in the lead. And you got the small caps up 2. Actually, the small caps leading on a percentage basis. Apple trading down $3 right now. Intel trading up 5 pennies. Microsoft up 11 cents out at 32.09. Let's see. On the way up, we've got LinkedIn. Wonder if LinkedIn here has reported some numbers or anything. LinkedIn, no, just talking about job growth out there. LinkedIn trading up $6. That's up 6%. Trading out at 97.70-ish. You've got On Assignment. They're trading up $3.62. ASGN is a ticker symbol. Green Mountain Coffee, GMCR, up $3. And on the dollar side, you've got Netflix up $1.34. Eagle Material, EXP, up $1.94. USG Corp up $1.96. Baidu up about $1.65. Hartford Financial, HIG, they're up. Leading the way down is Apple this morning. AGO, Assured Guarantee, they're down a couple bucks. Baker Hughes, BHI, $1.67. Crexus Invit Corp, CX. How about that? I was looking at CSX, and CXS is actually down just a bit here. Looks like they announced the dividend, so maybe that's really all that's about. Schlumberger, SLB, down about 88 cents. Enbridge, they are down. ENB, they're down 88 cents. Let's go to our first caller. Let's go to Eric in Tennessee. Eric, thanks for calling. Thanks for holding.
Hey, thank you for taking my call. I really appreciate it.
My pleasure. What part of Tennessee are you from?
I'm in the eastern part, around Knoxville.
Oh, cool. Really great. You know, as a kid, used to go down to Gatlinburgers every year. In fact, right around Easter, that's a pretty busy time there. And then I think once I did get my driver's license, myself and my buddies, we would go down into the Smoky Mountains. You ever run into a big bear? Ever go down into the Smoky Mountains?
Oh, yeah. I mean, we're, half hour out of the Smoky. So, the bears are small. I mean, but you do see them a lot. And, thankfully, I've just seen the small ones. I don't want to see the big ones. So.
Yeah. One time we were on the trail walking and, a pair of shorts, just a couple of crazy kids that had had a few beers, I'm sure. And we were walking down a trail and just off, we look at this big bear just standing up, looking at us and saying, "Oh my goodness."
Yeah,
guys, let's just be cool. Just walk out here. And you had to because we were camping out. Because we were camping out, you'd have to really hang your stuff from the trees. You don't want them coming into your tents or what have you. At least I didn't.
Right. I backpacked in Yosemite for a bunch of days, and that was more of an issue with bears there. And I got a little lazy bear bagging my stuff the last night. Yeah. And boy, they were tearing it up that night.
Man.
Anyway.
There's a commercial on. It's funny because it reminds me. There's a commercial. I don't know if you've seen it. I think it's a security company commercial, and these folks have decided to. I mean, I haven't really paid attention to the commercial, but they've got like a panther or something that's sitting up on their dresser that's watching them at night.
Yeah,
You've seen that? Yeah.
Yeah.
So if you're not careful with your goods and you're out there camping, that's what you're asking for. Somebody's eyes looking at you, and nobody wants that.
Yeah, absolutely. Not a good thing.
Yeah, give your food. So what are you doing with the spies? Tell me how I can help you out.
All right, I'm looking at this, and I'm wondering if you could just help me. And I'm trying to be concise in my thinking here, but I'm looking at this last move. And we'll say it's the last 4 months or so on the spies.
Okay.
And I'm looking at it now with regards to going short.
Okay.
Now, I'd heard you mention, like, you wouldn't necessarily buy a stock to go long unless you saw a sign of strength.
Well, sometimes when we're taking a look at a sign of strength, we're talking about off of a bottom, let's say.
Okay.
So I mean,
right.
so there are not that you don't want to take a look for sign of strengths up on top, but there are certain times when you're going to get into an equity. And especially, so you kind of picture it like this, if you will, Eric. If you take a look at, and we'll take a look at something like Great Basin Gold. I'm not going to put it up on my chart, or take a look at natural gas.
Right,
those are.
I know what you mean.
Yeah, so those are two that have been hammered pretty well. And what you're looking for when we say a sign of strength, figure that most people that are still in that trade are in a losing position. So, those folks, so you're always going to have turbulence along the way. And what the sign of strength is, typically, there's not enough of you and me and, let's say, the tigers in the tiger den that are going to purchase enough shares that are going to be that conviction behind the move. What you're really looking for in a sign of strength is when all of a sudden, you've got some funds that are stepping in there, because you want to take those folks to the dance with you, and you especially want to have that when all you've got is overhead turbulence all along the way, because you've got folks that are just looking to be able to grab some of their money back as a stock starts to move up. Does that make sense? Now, when you're at highs, when you're truly in a bull run. So if you're in the frame of mind as you're taking a look at stocks that you're in a bull run, then what you like to see is signs of strength, and you'd like to see where you're leaving the field behind, because everybody's chasing up to you, wanting to go ahead and push that stock higher. So in bull runs, you'd like to have. You've got two choices. You can either have those things that have been beaten down that you think are going to have a good move, and that's one way to take a look at it. Or you can take a look at something where it's not overextended. They're a good company. They've got good momentum, and everybody's at the party having fun. And you just have to decide which trading style best fits you.
I see. And I guess the way my question is, to before I would get short this very slow creeping 4-month move we've had here, would it be smarter to wait for a true sign of weakness in this market, we'll say, on the SPY, and then see if that plays out on a bounce after the big sign of weakness? It's more a philosophy of shorting, I guess I'm asking you, because, you could have tried to guess the top and put a stop in and got stopped out and tried to do it again, maybe 3 times or so you'd have been, stopped out in this last move.
Yeah, so
you know what I mean?
I do. So I'll give you my best take. And look, anybody can read the left side of the chart. Okay, so it becomes a little bit easier. But let's just assume that we put that off to the side, put that on the table, and then say, okay, we're going to look for some type of signal in order to be able to go short. So what I do like is I like some type of candle signal, either a pattern that's completing. And the real preference, the mother of it, is where you have a pattern that's completing and a candle signal that backs it up. Now, short of that, do you have some type of candle signal? Do you have, and sometimes when we talk about candle signals, we talk about, testing a high on lighter volume and closing back underneath it. But if you do take a look at the SPY specifically, since that's what you're looking at, if you were to take a look at February 29th, what you saw inside the SPYs was you saw a bearish engulfing candle. And so that would have been a candle signal to say, okay, I can go ahead and take a short position. Now, with a bearish engulfing candle, since we were talking about bears, your resistance is going to be the high of that candle. In this case here, February 29th. If it had engulfed some other prior candles that had higher highs, but still just engulfed the body of it, then it would have been the high of the candles that it engulfed. But in this case here on the SPYs, in this case here on the SPYs, the high would have been 138.19, and as soon as you got to close over 138.19, you would go ahead and close out the short position, assuming that you hadn't been stopped out. Okay. And so in that case, that was a signal. If we take a look at trading from yesterday or ever since the market then pushed up after March 13th, there is no candle signal out there that would tell you to go ahead and take a short position.
Gotcha.
Okay. There was another candle signal. So now let's just kind of go backwards, if you will. As the market was making a high on February 15th, the spies put in a bearish engulfing candle. I'm pretty sure that's where I went short. No, I don't even know if that's where I went short. I'd have to go back and look. But there was a bearish engulfing candle, and that bearish engulfing candle probably was. That bearish engulfing candle, I didn't go short the spies because I went short something that was weaker, which was the small caps. But what I do is correlate what's going on inside the indexes, if you will. In this case here, on the 15th, you had a bearish engulfing candle that engulfed 2 trading sessions. Okay, so I give 2 trading sessions a little bit more weight than 1, 3 more than 2, and so on. And now what you also want to do is you want to take a look at where's the volume. And the problem is that in this case here, you want to see some real volume to the downside. Well, the spies have got volume on March 6th at 201 million shares. And if you take a look at the volume when you broke out on March the 13th, you did 190 million shares. Okay, it didn't break out on the same type of volume to the downside, but you do have a gap out here. And this gap, which is really going back to that bearish engulfing candle from February 29th, that gap, which is really the gap was from the prior session, Eric. It was really from March the 12th. That gap has to be respected. You always have to respect gaps up and gaps down. And that's really when you took a look at March 6th, the session before on March 5th, you had a nice gap down. And it had to be respected until that gap got closed. You had to say, okay, being short still made sense, especially with that bearish engulfing candle on February 29th. To me, that's the only way that you can really play. Like I say, anybody, can read the left side of the chart, if you will. But I would look for some type of pattern completion followed up by some other type of signal that's out there.
Very well done. I really appreciate it.
Okay, and then what I would really do is if you have a system and you take a look at charts, what you then really want to do is you want to go ahead. In my opinion, I'm just teaching you my technique here, is you want to put all 4 ETFs up on the screen, and you want to see if you've got any kind of harmony out there. And what you really want to do is you want to go short the weak link. That to me, that's the better trade. Even if you get a signal in the spies, for example, if you took a look at the Russell 2000 during that same period. So if we take a look at the spies on February 29th when it was making a bearish engulfing candle, let's go take a look at the Russell, see what it was doing on February 29th. And on the February 29th candle, let's see here, February 29th, it was trading well above the February 2nd area. And when we take a look at the small caps, when it closed on February 29th, it was closing into February 2nd. And February 2nd was another area where you had a gap up in the ETFs. And on the small caps, you had 46 million shares on February 2nd. And when the 29th candle came, you had 64 million shares crushing down into it. You see the correlation there?
I do, yes.
Yeah. So that way, what made more sense to me, because you had other patterns that were out there, was you had a nice bearish engulfing candle into spies. We had the small caps moving down into February 2nd with volume. And what it said to me was go ahead and be short the small caps if you weren't already for some other reason.
Very good. I appreciate it. Hey, you just gave me a 10-minute go to school. So
perfect.
I appreciate that.
No problem, Eric. Hey, thanks for calling. Have yourself a great day.
You too. Thanks.
All righty. Folks, so you got the Dow up 15 points. You've got the S&Ps up 2, Composite up 10. Small caps leading the charge on the way up 0.42. Apple just turning green. Looks like that was just dangling a carrot out there. There we go, back to green. It's really flat, if you will. Let's go take a look at Priceline. Priceline now leading the charge here. Priceline trading out at $704. How would you like to be William Shatner, folks? Not too bad of a deal. In fact, I believe that Larry Pesavento at one time was helping William Shatner with his trading. Now, you can find out just simply by calling in and talking to Larry, because he's going to be on today from 12 to 1. Following this show, you're going to have Tom and I doing the Money Masters, Basil Chapman in the on-deck circle from 11 to 12. Today is Wednesday, right? Yeah. And then David White, the 3 to 4 warm-up band for the Tom O'Brien Show. So let's go ahead and close down these windows here. Close all windows, and let's go start taking a look at what's popping and what's not popping. So it's a Priceline PCLN trading out in the $706 range, and that little guy, not so little. Look at that thing. Look where that thing came from, folks. If you go back into 2006, trading at $23, trading at $706 right now. And if you take a look at volume here, you did have a nice gap up. That gap up occurred on February 28th. Gapped up with 2.7 million shares. And if we were going to take a look at any pattern that is out here, what we would do is really move back towards a weekly or a monthly chart. Let's just take a look at, that looks like a little parabolic move, doesn't it? Let's go back and take a look at a weekly chart on Priceline. And Priceline, that thing, it made this, I did have this marked as a 1 to 1.618, A to B equals C to D. And take a look at how this thing moves sideways. But this thing does have some parabolic look to it. Doesn't look at the move here in Priceline. Seems to me, if we just simply, let's just go ahead and erase this off here. Let's just take a look at the action behind this move here right now. What I'm going to do is just simply come down to the low that was established on December the 16th and just simply come up to the high of today right now. Well, I'll just come down to the, let's see here. Just trying to draw a line here just to give you an idea of the power behind this move. I'll have to do that when we go to break. But if you take a look at that angle of that move there, folks, to me, and this is the weekly chart that we're looking at. I should be able to pull this back here real quick before we go to break. Take a look at that power of the move to this one. This is a real powerful move behind it. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow trading off about 9 points right now. S&P's down 1. Composite up 2. Small caps up 1. Apple down a buck. And, folks, there are 2 master skills of life. That's called the art of the science of achievement and the art of fulfillment. And, you heard the commercial. Hopefully you heard the commercial before. I am coming out to Denver Friday and Saturday this week doing a master trader course. And it really is all about, to me, it's all about mastering whatever it is that you want to be able to do. When you take a look at the cost of inaction, the cost of inaction is always much more costly than the actual cost of action. And it's not necessarily a way that people think about things. You just simply go back and take a look at your life and take a look at some decisions that you could have made. You had the opportunity to turn your mirrors into windows, meaning you could have gotten out of the way, because the only thing that gets in the way of turning the impossible possible is yourself. It's that I am. And that just means you want to turn your mirrors into windows. It means you want to be able to jump through those windows, folks. And so, there are folks that are going to be doing that with me in Denver this Friday and Saturday. If you are sitting on the edge, then you should just simply do it. You should just simply attend it, because you've got a money-back guarantee. I want you to come there, and after 2 days, if you don't think that you've got enough out of it, you don't pay a penny. And I don't believe that anybody out there in the listening audience is actually going to take advantage of that. And I would not ask you to do something that I wouldn't do. I jumped through that window. That's how it is that I'm here. That's how I was able to sit there with Eric in Tennessee and walk through the spies and give him some strategies. If you'd like 2 full days, folks, because to me, the understanding the business that you're in is so important, and I don't think this is a once-in-a-lifetime opportunity for us to really get our head wrapped around this money game that we've been given. You take a look at the data that we have available to us to be able to make trading decisions. That's why you want to be able to spend time and understand the ability on the mental side with regard to how it is that you approach this game. And it's a lot different than the way that most people are actually doing it. So we're going to share those strategies, and I'll be back in Tampa doing the same thing on April 13th and 14th in Boston on April 27th and 28th. I do believe today is the second day of spring, and I heard that it was going to be in the 70s up in Boston today. Pretty incredible. What a winter it is that we've had. And I hope that they actually keep it the same way. Now I'm going to the home of Peyton Manning. I'll be there late Thursday night, and we're going to have a great time on Friday and Saturday. Go to the homepage at tfnn.com. You can check that out, folks. If we take a look at what's going on here in the SPYs trading out at 140.40. And what we're seeing out here is nothing in the way of any type of significant volume right now. You've got the SPYs coming into a high volume bar from the close of yesterday. They did 4.1 million shares. Right now you're coming into that with 1.7 million. You've got a couple of minutes left in the trading session. The swing point is actually out there at 350. That has 3.5 million. So at 3.5 million, you're going into a 1.6. Not enough money, not enough volume, if you will, to bust it down. And that seems to be the story that we've seen out here. You know, you took a look at the SPYs, took a look at the Dow yesterday and the small caps, and simply from the open, you can see this gap down. And what it was doing was it was making a 1.272 expansion off of its most recent set of swing points. This is just looking at the 5-minute chart here. When you do that, folks, you know, you're going to typically do something different. Now, you may go down to the 1.618, but once you've done that expansion, you're typically done, and you're going to do something different. In fact, if we go take a look at the ES Mini on the 30-minute chart here, and I just go ahead and remove this, the ES Mini made a 1 to 1.618, A to B equals C to D. That was coming off of the highs that were put in at about 2 o'clock. And if you take a look at this, you've got that 1 to 1.618, A to B equals C to D. And if you had the art of the chart, you would know that you were going to do something different after you did that. Thanks for being here, folks. Have a great Wednesday. Stay tuned. Tom and I will be up next. Then Basil Chapman, Larry Pesavento, David White, 3 to 4, Tom O'Brien Show from 4 to 6. Have a great day, folks.